IJSmith365.com.
Hey, what's up everybody? This is AJ Smith from AJSmith365.com. Today is Wednesday, September 16th, 2020. And today's been a day that a lot of people have been waiting on. It's the day that, well, in regards to the stock market and investing, because today is the day that Snowflake, the data analytics company, the database company, made its debut on the New York Stock Exchange and available to the public to invest in and have an ownership stake in. And I'm not going to talk about, because I think if you're following investing, what I will say this at a high level is that Snowflake made a debut. It's been highly talked about for the past couple of weeks, if not a month or two in the investment world. It was going to debut as the biggest IPO ever, and it definitely lived up to the IPO hype. I do believe it reached a valuation as high as $80 billion for today. It was supposed to it started out, or was going to be estimated to have an IPO valuation of 30 billion, and by close I think it's closed at around 70 billion valuation. The cost basis, or cost per share, was going to be, I think they started off at $75 per share. That was originally going to be the estimate. It wound up closing at like $253 and I think 98 cents, or let's say 253, 254. But enough about that, because I really don't want to talk about that. What I want to talk about, the reason why I'm making this video, it's not really about the hype around Snowflake, because I think you can look and find a dozen conversations and or publications talking to you about Snowflake and probably analyzing it far better than I can. What I want to talk about is just kind of a look at just the socio-economic system and the way things are set up. And this is not to bash capitalism or to bash the American capitalism or quote unquote system. This is just a video just to kind of bring awareness to individuals just how the world in particular is set up. I am going to have a book that's coming out hopefully by the end of the year. It's called Lords, Vassals, and Peasants. And a part of the conversation in Lords, Vassals, and Peasants, or particularly what the book is about, it's about how people move throughout the socioeconomic levels within society, and it shows why the rich get richer and why the rich prosper and why the middle class pretty much maintains, and why people who are lower class tend to struggle and have a hard time, and also showing how it is difficult to move through those channels. But one concept that I want to talk about in Snowflake definitely, and not just Snowflake period, but other IPOs kind of provide a good illustration for what I'm going to say, is that the rich get richer for this particular reason. I was able to participate in the IPO of BigCommerce, and I actually did relatively well on BigCommerce. Just to make a long story short, BigCommerce was another, it was supposed to be the Shopify equivalent for those who missed out on investing in Shopify. BigCommerce came out. I definitely missed out on Shopify. BigCommerce was there. BigCommerce was initially supposed to IPO at $18 to $21. Then the insider investors boosted that up from 18 to 21. Then they, before, I think a day or two before it IPO'd, they changed it to 21 to $24. And then by the time it hit the market, which I'm going to talk to you about, it debuted at $60 per share. I wasn't able to get in because I thought it was going to debut between 18 to 24. So when I set up my trade, I set up a stop limit at around $27, $28. Didn't realize that it had shot up. So by the time I was able to check my account and get in, I got in at a cost basis of $74 per share, which is far higher, 3 times higher than the $21 to $24 that it was supposed to trade at. I got in at 74. Luckily, luckily the stock continued to go up to, I think, 160. But by the time I dumped my shares, I dumped at about 141. So I was able to make and pretty much double my money. But what I'm focusing on is this. I get alerts from my broker that basically lets me know when a stock is going to IPO. And then they let me know, they say, they'll say XYZ company is going to debut, is going to start trading on, let's just say, X particular date. Do you want to participate and get in at the IPO price? Now, when Snowflake came out, BigCommerce, I didn't do that. When Snowflake came out, I said, well, Snowflake, there's a lot of talk around it. It's going to be huge. Let me see if I can get in. Call my broker up. My broker says to me, I said to my broker, I got the email. I would like to participate. Just because BigCommerce was supposed to open up at $75 to $85 per share originally. Got the email, and then they upped the price, the IPO price from 75 to 85 to then it went up to, I think, 100 to 110. Called my broker to say, yes, I would like to participate and get in at that price. They set aside particular amounts of shares within each brokerage for their investors to get in at that price. But in order to meet the criteria for you to get in at that price, you have to meet a particular criteria. The first criteria being you have to have at least $500,000 in your investment account. And then I think the second criteria was something else. It was another financial criteria. But most individuals do not have $500,000 in their investment portfolios. Not most regular middle class. Definitely, if you're in a lower income bracket, you don't have that. Some people in the high income bracket do not have that, or at least high, should I say, net worth don't have that in their investment accounts. So when you have particular amounts of money, if you have $500,000 or more in your investment account, you are considered privileged and you get first choice to participate. You're able to get in at the $100 to $110 price range, but before it even hits the market. Because what a lot of people don't understand, and I probably should have said this first, is that the primary market for the stocks is buying directly from the company. As an example, let me give you an example of that. Primary investors would typically be your venture capitalists. So a venture capitalist, similar to what you see on Shark Tank. Shark Tank goes in on the show, you'll see the person say, I'll give you 10% of my company for a $100,000 investment. Then you're getting 10% of the company, and if that company decides to go public, they translate that 10% into particular shares. So if the company's offering 1 million shares, they would say, okay, we're going to give you 100,000 shares because that equates to your 10% investment. That's the primary market for investing. It's buying your shares or getting your shares directly from the company and or owner. So you can also get that too if you work for a company. Let's just say you go and work for a company and the company says that, if you want to work for us, typically you're in an executive position, they'll say, we'll give you 1 million shares or 100,000 shares in compensation. It's a part of your package. That's the primary market. The New York Stock Exchange and the NASDAQ is the secondary market. So those are for those primary shareholders to sell in the public on the public exchange. So that's the secondary market. So with Snowflake, I'm saying all that to say this is that by the time individuals like myself get a hold of that stock, those stocks are inflated. Going back to another example would be this. If I can recall, you have certain celebrities, particularly I do believe Serena Williams, and I may or may not be wrong, she owns a share, or she's an investor in Impossible Meats. So she is a primary investor, or if that company ever decides to go public, she's going to make out, and she'll definitely be in at whatever IPO price that they're going to list at, and then she would be able to dump some or all of her shares through the secondary market, which would be the NASDAQ or the New York Stock Exchange. Nas, the rapper Nas, who owns a venture capitalist fund, and Nas is doing very well as an venture capitalist. He was an initial investor in PillPack, which sold to Amazon for $1 billion. He was an investor in Dropbox. He was an investor in Robinhood. So he's had some pretty good investments. And again, as a venture capitalist, you're getting your shares or your stake in the company before this company even goes public. So by the time it gets to individuals like myself, that price is inflated. And getting back to Snowflake, which I'm proud to say that I wasn't able to pick up any shares in, and I definitely wasn't going to pick it up at the price that it traded at and it closed at. When you try to get in again, I couldn't get in because I wasn't a primary investor. I didn't meet the qualifications to get in. And so that stock didn't really start trading like I said, today, it's September 16th, 2020. It didn't start trading on the market until about around 12, 1 o'clock, or it traded after noon Eastern Standard Time. By the time it hit the market, because you can start watching it in your account, I had set up an automated trade to purchase, I think, a couple of hundred shares. I think I was going to pick up about 250 or 300 shares of Snowflake I was hoping to get it in at $133 per share. But the day before, again, there was a news report that somebody said that it's going to debut at $240 per share or $220 per share. And that was an inside report that was unverified, but obviously it was an accurate tip, because by the time it popped up on the New York Stock Exchange, which Snowflake is trading on, it popped up and the bid price started at 240 or 241. It was 240 or 241 was the bid price, and I think somebody was asking, or they were asking like 253, as high as 253 at the open. So you have to look to say those individuals who are privileged enough to get in at 100 or 110 are going to be those individuals who have enough money. Either you're going to have $500,000 to get in at the secondary market, or you've already gotten in as a venture capitalist, such as you see Warren Buffett and his company Berkshire Hathaway. They were able to get in before the IPO debut, as well as I think the company Salesforce. They were able to get in as well. Those individuals have the money and the financial resources to get in at the opening price of, I think, 110. But by the time it gets to the secondary market and to regular buyers, the price is way inflated. That price didn't start until about, I think, 240, 253. The stock went up as high as 300. I feel sorry for those individuals who bought at 300. Even I saw it at 289. And I thought about pushing the button, and I said, no, that price is way too high, because I remembered what happened with BigCommerce. So I didn't even execute any trades at that point. I thought the price was way too inflated. The cost basis of $289 per share, even 240 I wasn't going to pay that price. So I let it go, and I just said I will focus on other investments that are out here within the market. Companies that are stable, that have been trading for a while. And also too, IPOs, sometimes they're a gamble. You have to be a long-term play. Snowflake was really honestly going to be my short-term play. I was going to get in, I was going to pump and dump. I was going to I shouldn't say pump and dump, because that's a negative term. I was just actually going to buy a whole bunch or buy as many shares as possible that I could afford to buy, if I could have gotten in, because I think I set a stop limit at 133, which wasn't even going to be achieved. But if I could have gotten in the 100s, I was just going to hold on to it for a couple of days and actually just sell my shares just to make some quick money. But I just wanted to make this video just to tell you and to talk about how the stock market works, or how investment works, and really how money moves, and how the rich can continue to use their financial resources to actually make more money. Whereas when you look at the middle class and the poor, they're actually taking a lot more risk, because when you're buying in at 110, as rich people would be doing, you have a lot more profit to make as opposed to someone getting in at 240, 250, 280. And definitely if those, and even when it got as high as 300, if that price actually crashes, and if the market actually crashes during this time, those individuals will be severely hurt. But an individual who bought in at 110 could definitely be okay, because the price may not fall as far as that 110, and their cost basis may still be profitable. So that's just my take on not really Snowflake, but just an illustration of how money moves and how the rich are able to leverage their resources to get richer, whereas other people that don't have the access that they have, continually to maintain. And again, I'll just say this at conclusion: this is not a bash on being rich, because I definitely want to get my dollars up to where I have $500,000 in my account, so that I can, experience some of these benefits and luxuries and privileges that rich people have. But I just wanted to bring awareness to the stock market, and this isn't even just applicable to the stock market. This is applicable to a lot of other things in life as well. So this is AJ Smith, 365.com. Just wanted to drop this little bit of knowledge on you. I hope you have a good day. Stay safe, stay healthy, and be well. Peace.